Thanks for joining us at XM.com for this Forex Preview video. I'm Christina Marujos. Joining me today is Senior Investment Analyst Marios Hadjikyriacos. We'll be having a look at the Reserve Bank of New Zealand, which concludes its policy meeting early on Wednesday. Marios, economic indicators out of New Zealand have been extremely solid lately, which would argue for a more hawkish central bank. Investors are anxious to see if the RBNZ will give any hints of rate hikes coming up soon. Do you think this is a probability at this meeting?
Hello, Christina. Well, it's definitely a possibility. However, I don't think it's very likely. Now, let's take a step back. You already pointed out that the economy is doing great, right? Economic growth is above expectations. The housing market is on fire. Business surveys lately have been pointing to a very hot labor market, with companies having difficulties finding workers, and also inflationary pressures are intensifying. And it's not just the transitory style of inflation that other central banks like the Fed are telling us, because inflation expectations are moving higher as well, which implies that this inflation episode in New Zealand might be more persistent. Now, all of this would normally argue for a more hawkish central bank. You are completely correct. But here's the issue. Markets are already pricing in an 80% probability for a rate increase by November this year. And they are also pricing in a second rate increase by the spring next year. So investors already believe that the RBNZ will be the first major central bank to raise interest rates this cycle. Now, what does that mean? I believe that it raises the bar for a hawkish surprise at this meeting. So if the market is already expecting a rate hike in November, it's difficult to surprise in an upside manner. A lot of this hawkish story is already priced in. Now, I'm not saying a positive reaction cannot happen, but I think that the RBNZ will prefer to retain some flexibility, right? Why would you commit to a rate hike in 5 months when you can take a step back, open the door for a rate hike, but signal to the market that I want to see some more data before I take that decision? So if they do retain that flexibility, I think it's likely to be seen as a disappointment by the market, and it would argue for a downside reaction in the Kiwi.
And speaking of the Kiwi, even if the RBNZ tries to keep a balance in its statement, what is the Kiwi's medium-term outlook?
Well, that I think is positive. So we might see a negative reaction on the decision this week, but the overall picture, I believe, is quite bright. Now, the economy is booming, and ultimately, at the end of the day, it doesn't make a huge difference if the RBNZ is going to raise interest rates in November or in February, right? What really matters is that it will be the first major central bank to do so. So one might ask, the Kiwi hasn't really, responded much to these hopes for tightening so far. If you look at the chart, the Kiwi is rather subdued. Why is that? That, I think, has to do with the real yields. So markets have been pricing in expectations for more tightening by the central bank, but they have also been pricing in higher inflation. So that has kept real yields flat. Going forward, that could change. Inflation fears could fade once the RBNZ starts to exit cheap money, and that may allow real yields to rise, and therefore the Kiwi to perform much better going forward. And I believe that the Kiwi is going to perform the best against the currencies whose central banks will not be raising interest rates over the coming years. So those would be the Japanese yen, the Swiss franc, and to a lesser extent, the euro. The Kiwi might perform against all of those.
Marios, thank you for joining me today. This was the Forex Preview on the RBNZ policy meeting on Wednesday here at XM.com.